Okay, hello people. Welcome everybody to the FX Street webinar where we're going to talk about fighting the demons inside and not the $4 trillion marketplace. Now, good morning, Harley. How are you? Just a quick round the room to make sure that everybody can see the PowerPoint slides in front of them. Can everybody see the presentation? If anybody can't see the presentation, then just let me know and I'll try and reshare. No, everybody's good so far? Yes. Wonderful. Okay. So the reason for this webinar, I know that a lot of, the webinars I do and many people do are about, trading systems and all of that kind of good stuff. But ultimately, the trading system means absolutely nothing if you can't control yourself, if you don't treat this as a business, and give it the sort of attention that it deserves. So I want to talk a little bit about what it really takes to be successful in this business. Okay. So very quickly, we have to give a quick disclaimer. I mean, we're not talking about any chart setups here, but in any case, all of the content of this particular webinar is obviously not investment advice and it's for educational purposes only. As I said, we're not giving any trade setups, so there's not too much to be worried about there. But in any case, that's the disclaimer. A little bit about myself. I'm the co-founder of Traders Corner Online. It's a trader education website. It's one that I started with my brother. Been trading the FX markets for about 7-ish years now, back in 2005. I release weekly analysis, write some articles, written a couple of books and things like that. And if you guys want to follow me on Twitter, the Twitter handle's down there as well. Okay, so now that we've got all of this out of the way, let's get to the meat of everything. So we want to talk about trader psychology. Okay, now I'm sure everybody in this room has experienced some sort of, retarded trading at some point due to their emotions and, taking trades that have got absolutely nothing to do with your system, but you take them anyway. We're all guilty of it. I even make mistakes from time to time because of things like this. So we really need to learn to control our emotions. I'm sure all of you have heard the saying that you can give a great trader a poor system and they can come out on top, but you can give a poor trader a great system and somehow they'll still manage to lose money. And one of my favorite quotes is from a very famous hedge fund manager, I believe it's him that said it, Paul Tudor Jones said, you can give the masses tomorrow's Wall Street Journal, and somehow 95% of them will still manage to lose money, even with the crystal ball of tomorrow's Wall Street Journal. So that's kind of an indication to say that, us as human beings, we're not built to be good traders. Everything that we do within our lives gears us towards losing money at trading. So we really need to learn to control our emotions and control ourselves to be able to be successful at it. Okay? Because I'm sure a lot of you have probably tried systems in the past and somehow it seems that the person that develops that system can make money at it and maybe a few others can make money at it, but it doesn't matter what you do or what you try, you just can't seem to make it work for you. And a lot of that has got to do with yourself as a trader and how you control, your own emotions and how you treat your trading. So trading psychology, one of the biggest reasons for failing as a trader is your psychology, in my personal opinion. As I said here, even a winning system can fail if you don't control your emotions. Now, everybody is guilty of this. As I said, myself, I've had days where, I know the system very well. I know that I can make money trading my system. I have days where I just fail to stick to the rules and hence I let my emotions get the better of me and, the system, which I think is pretty great, just fails me, but it's not the system. At the end of the day, when I go back and I take a look at the trades, I realize that actually, 70% of these trades on a bad day, sometimes they weren't really even trade setups. And what happens is you kind of get into a trend of taking, bad trades, and then you try to make up for the previous trade that you lost. And then, whereas let's say, for example, you've taken a trade, for no particular reason, just because you think the market's going a particular way, then the market goes against you, it stops you out. But then you take another trade, which may be valid. But the difference with this trade here is that you're now trying to make up for the loss of the previous trade. So whereas you may usually get an exit point, let's say, for example, you like to exit at the swing high. So you're buying in an uptrend and you like to exit at the swing high. Because you took the stupid trade beforehand, suddenly you don't want to take your profits at the swing high. Suddenly, you think, well, this one's going to be a runner and this one can make me back all the losses of before and then put me in profit for the day. So you don't take profit where your system says to you to take profit. And guess what? The market turns around, it stops you out, and now you're 2 losses down on the day. Just quickly around the room, how many of you have been in that position before? You started the day taking a trade, not adhering to the rules of your system. Suddenly, you've taken a loss, then you take another trade which possibly, does adhere to the rules of the system for the entry, but then you don't stick to the exit because you're looking to make back all of that money. How many people in here have actually done that? Just quickly, say yes, type yes, no. No one? I'm alone here in that? Yes, oh, thank you. No. Excellent. Okay. Now you've changed. Greed, exactly. Okay, so, as you just said there, greed. Fear and greed and overconfidence and lack of confidence. And to me, these are kind of the key traits that can really, and fear, indeed, that can really cause you to fail as a trader. Okay, Sylvester, we'll go into fear and how we can get over that in a second. So fear and greed. How does this manifest itself in your trading? Well, first of all, fear after, let's say, for example, you've taken a string of losers, you can be scared of giving back profit. So it can cause you to exit too early. And I actually have some of my members who I've spoken to about this because they've had that very same issue. They've started trading the system. They've hit a couple of losing trades, maybe let's say 3, 4, 5 losing trades. Then suddenly they get their first winning trade and they cut it so short that it's ridiculous. So let's say, for example, their average stop was 50 pips. Okay. And I like to say to go for a positive risk reward. Well, after these 3 or 4 losing trades, you get your winning trade, you get 20, 30 pips on the table and then you cut it short. Now what you're doing here, you feel better because you've taken some profit, but you've just completely messed with your edge of your system. You've just completely destroyed your system and you're trading a completely different system now to the one that you've back tested and you've got statistics on. All right. So that's one way that fear can completely, mess up your system. You've got some profits on the table and for some reason the paper profits mean more to you than the paper losses and you want to take those profits. You don't want to give that back to the market. But funnily enough, when you're in a losing trade, you're quite happy to sit on it and let it ride against you. I wonder why that is. And that brings me on to the next one. Fear of taking a loss can cause you to let a small loss turn into a massive loss. Okay. How many of you here have been in a trade before? The market started to go against you. You've decided, I really don't want to take this loss. You've negotiated with yourself. Maybe you've gone out to a bigger time frame. You said, well, actually, you know what? The longer term trend is in this direction. So therefore, I can just hold this and I'll probably go into profit. And then it trades against you some more. And then you negotiate with yourself some more. And then it trades against you some more until finally you don't really have a choice. You have to cut your position before you get a margin call or something ridiculous like that. So this is how fear comes into our trading and completely, annihilates our trading performance. And fear stops you taking the next trade. There's something called performance. Exactly, Sylvester. Performance anxiety. Even worse than getting into a trade and cutting it short is not getting into the trade at all. For example, there's a trade on the dollar yen this week, okay, which I took. And the first one, the dollar yen's in an uptrend. We've been buying this all of February. It's been a wonderful trade. Now the first trade we took, stopped us out. We took it out. I mean, there was some factors that possibly could have caused us not to take the trade, but we took the trade anyway. And it stopped us out. So we came back in the morning, saw that it stopped us out, readjusted, and put in a new order to get back into the trade. And then that trade went on to make us quite a lot of money. If any of you take a look at the dollar yen chart, you'll know about the trade that I'm talking about. However, I have some of our members who failed to get back into that trade. Okay, so they took the first trade and then they didn't get back in. When the setup was completely valid to get back in, they didn't retake that trade. And again, what this does is this recreates your system for you. You're suddenly not trading the system that you that you've back tested, you've got the statistics on, you're trading a completely different system. Because your system should say take every single valid setup unless X. And X isn't how you feel on a particular trade. X has to be some sort of predefined rule. Maybe it's if you've taken 3 trades in a row, you need to walk away for a couple of hours or a couple of days or something like that. Not just because, oh, the last trade stopped me out, so probably the next trade's going to stop me out as well. A lot of people, and myself included, we feel like sometimes when we get into trades, there's a little guy on our computer that's just waiting to fade us. As soon as we get into the trade, the market trades in the opposite direction and we get stopped out in like minutes. Okay, and that's got nothing to do with the trades that we're taking. The market doesn't have a memory. The market doesn't have your trading account on their screen. They aren't sat there waiting to fade you. Okay, and I know that it can feel like that. So ultimately, the lesson to learn here is that you have to take the valid setup. If it's a valid setup, you take it. There is no other option. If it's not a valid setup, you don't take it. But don't let yourself fall to performance anxiety. Don't let yourself, not take the next trade just because the previous trade was a loss. How many of you guys here have flipped a coin before? I'm sure we can all agree that each coin flip is individual, it's unique, right? So you flip a coin and it's either heads or tails. Over the long run, it should come out 50-50, but any one single coin flip is going to be heads or tails. And that's exactly like trading. Every trade that you take has a chance of being stopped out or making you money. It doesn't know what the last trade was, or the previous 3 trades were. It's just a setup that you have to take. Okay, and that's really the way that you have to look at these things. And then greed. Getting greedy causes you to take bigger risks than you, exactly. Yeah. Getting greedy causes you to take bigger risks than you normally would. So perhaps you've been on a profit, on a winning streak, and, you feel like everything you touch turns to profit. And then you up your position size. You're not ready to up your position size, but you do anyway. And by upping your position size, you then wipe out all of your previous profit. Okay, and that's what getting greedy does to you. But this also does something else. This then causes you to think that maybe your system isn't working. So let's say, for example, you were trading at £10 a point, okay, and you'd amassed £1,000 worth of trading profits over the past few days, for example. And then you suddenly think, you know what, everything that I touch, I can make money. I know which way the market's going. I just have a feeling for the market. And you decide, instead of taking £10 a point, I've just made £1,000 in the past couple of days, so I'm going to go for, let's say, £20 or £30. Let's say £20, and then suddenly you wipe out your profits in half the time you took to make it. You think that your system doesn't work, but what you failed to recognize is you've just upped your position size. So even though it took you, a week to get to a certain point, you've just doubled your position size, and you're wondering why it's taking you half the time to get back to scratch and to start trading in the wrong direction. So this is something you also have to be very wary of. If you're going to go from one position size to the next, you need to do that consciously, not just because you feel like everything you touch turns to gold. It needs to be a conscious decision, and you need to understand the implications of doing that, of going from one position to the next. And in any case, I wouldn't necessarily recommend just doubling your position sizes. That doesn't necessarily make too much sense. Okay? Now, confidence. For me, this is one of the keys to do with being successful as a trader. There's a fine line between too much confidence and too little confidence. I'm not greedy, but I have a lot of fear. I can easily forecast points. Get that fear, never. How do I get rid of the fear? We're going to come to that in a second, Sylvester. It's not easy, but we will come to how you can get rid of some of your fear. So, there's a fine line between too much confidence and too little confidence. Right? You must have confidence in trading. You have to have confidence in your system to be able to trade through the drawdown. Now, I'm just going to, if any of you don't know this, newsflash, everybody is going to experience a drawdown at some point in their trading career. If you trade long enough, you will experience a drawdown. It just happens. There's no way around it. I've spoken to people and I've said, they've asked me about one of my systems, for example, and I've said, you can expect somewhere between a 60 and a 70% strike rate, which for me is fine. It's fantastic. It allows me to make money. But they'll go away and they'll say, you know what, I'm going to try and tweak it. I'll see if I can get that strike rate up to 80 or 90% or 95%. And what they inevitably do is that they curve fit the system. So they'll look at the last month and they'll throw a whole bunch of indicators on the chart to say, well, this would have got me out of that losing trade. This would have got me out of that losing trade, so on and so forth. And before you know it, they've got this completely ridiculous system that is specific for the last month's worth of trading. It's got nothing to do with the broader, market position or market condition. It's just that last month's worth of trading. This system would have got me the highest strike rate. Now, you don't want to do that. Okay. You need to understand that if you have an edge, even if you win 60% of the time, but you've got a positive risk reward, that's enough to make you a very, very good living as a trader. So you need to accept you are going to have drawdowns. Okay. And as I said, overconfidence occurs after a winning streak. So overconfidence is very, very dangerous. This goes back to the greed. You feel invincible. You take larger positions. You don't pay as much attention to the charts because you just feel that you have the golden touch, so to speak. And that's when you generally blow up your account. When you're too confident, you take ridiculous sized positions. You're not really doing any analysis. And that really is the big danger for a trader. That's where you start to blow up your account. But then, if you're looking to make money in this game, the lack of confidence is nearly just as dangerous, because the lack of confidence, it means that you don't take certain opportunities, you don't really test your system, and then as soon as you hit a losing streak, you start to go out and look for the next best system. There isn't one great system in this game, guys. There are many, many different systems out there. And hold on, like in a fight you can win, but you still have some wins. Exactly. And that's what trading is. It's a series of small battles, and you just need to win enough of the battles to win the war. You won't win every single one. You will take on some water, but you've just got to win enough of them. Alright, so where were we? Okay, confidence. Moving on to the next one. Outcomes and losses. And you'll see the next slide is about losses. So you need to accept that losses are a part of the game. Alright, you have to accept it. There's absolutely no way to get around taking losses. If you're trading, you will take a loss. I guarantee it. But you know what else I guarantee? You'll also make a winner at some point. Alright, that's just the way trading is. Don't fall victim to revenge trades. This is something we spoke about at the beginning of this webinar. A revenge trade is a trade where you've just taken a loss and the market owes you. So now you need to get the market to pay you back the money it just took off of you. And that will cause you to take stupid trades. Maybe your entries are right, but your exits will be completely incorrect, or your exits, you'll start moving your stop loss because you don't want to lose the trade. There's no point in getting revenge on the market. It's a much, much bigger animal than you or I. And it's always going to crush us. We are never going to win. If we go to fight with the entire market, we will lose in the long run, every single time. You try to trade without a stop loss, very start. Yeah, the thing with trading without a stop loss is it's one of those strategies, and this goes for everybody listening here. I have seen it written on various websites that trading without a stop loss is the way the professionals do it. I completely disagree. If you trade without a stop loss, yes, you can make money. In the medium term, in the short to the medium term, you can be wildly profitable because the markets usually, come back and revisit a price that you've entered at, usually. But there are those unique times when it never comes back to those prices. Just go take a look at, some of the yen charts and look at the highs there. Imagine if you bought at one of those highs because you don't trade with a stop loss and you believe the market always comes back to your point. There's no saving you there. Your account is dead. It's obliterated. Okay. So trading without a stop loss can seem like a really good idea. And in the medium term, it can even make you money. But at some point, at one point in time, you will catch one of those trades which never, ever come back to your entry point, and that will wipe everything out. Okay? So, outcomes. You need to judge a trade based on its execution, not the result. We need to get away from trading our P&L. Right? I know that I said earlier you treat this as a business, but you also almost need to treat it as a video game. For any of you guys that have got children out there, I bet you if you were to give trading to one of your children and let them sit there and play the trading game, quote unquote trading game, after a couple of months, they will be profitable because they'll find a way. They understand it's a game. They're not scared of the money. They're not trading the P&L. They're just playing the game. All right. And that's essentially sort of how you need to look at this. If you start looking at your P&L and judging every trade on your P&L, that's when you're going to, cause yourself some serious damage. You need to start to judge your trades on the execution. And to be able to judge on the execution, you need predefined rules. You need a plan in place. Does that make sense to you guys? And then, you know that you're making it as a trader the day that you can say, I've just lost, 3 trades in a row today, but you know what? I had a really good day trading. And someone will say, well, how was that? So because I stuck to my rules, I've got all of the statistics on my system. I know over the long run it will make me money. And I executed exactly according to plan. That is a good day for you guys. Your P&L is just a byproduct of that. Okay? Your kids have a great feel for the market. Exactly. Do you see what I mean? For us as adults, it's a little bit more difficult because we're looking at that little, black or red, those little black or red figures popping up on our screen. So we need to stop trading the P&L. As I said, discipline is a key to success here. And just again, losses are a part of trading. No matter how good you are, none of us have crystal balls. None of us can predict the future. If you can, you don't need to trade. You can just go to the shop tomorrow and buy a lottery ticket if you can predict the future. All right. None of us have our crystal balls. So therefore, we need to learn to accept our losses. And we need to learn to accept that a few losses do not mean that a system doesn't work anymore. For one of the systems that I trade, one of the longer term systems, there's a period of time back in sort of somewhere around 2004 where trading just the euro dollar, for example, you would have gone 5 months without one single winning trade. Do you hear that? No, not one single winning trade in 5 months. Every single trade you took stopped you out. Okay, granted there weren't millions of trades, it was a longer term system, but it was about 8 trades in a row. Now, how many of you here in this room right now would be able to carry on taking those trades? So let's say you've lost a month in a row. Maybe you can get to the second, right? And then you've lost for 2 months in a row. How many of us go to the third? I would guess that 95% of the people in here, once they've gone 2 months of not a single winning trade, would have been this system and gone looking for a different system. But you know what? At the end of the year, that system finished up. Okay? It finished up about 11% or something, which isn't a huge amount, but it's more than you get in the bank at the moment. But that is only if you continue to trade every single setup. Valid setup, okay? Every single high probability valid setup. If you continue to trade those, then you would have come out up at the end of the year. But the first 5 months of the year was between somewhere February and June or something like that. That period of time, not one single winning trade. Right? But that's why it's important to know your trading system, to know what to expect from it. Don't expect just to pick up a trading system and be able to be profitable. You might get lucky and hit a market condition which is favorable for that particular trading system. But, you equally have the chance of picking up the system and trading into a drawdown. We don't have control whether we trade into a drawdown or we trade into profit. But what you can do is you can test the system and you can understand statistically what you can expect from it. So then therefore, next time you're experiencing losses, you can go and look at your statistics and you can say, you know what, this is expected. This has happened before. From my own personal experience, it's probably about 6 weeks ago now, I was day trading. And I was day trading the euro dollar, and in the morning, I couldn't have been a worse trade. Well, that's wrong to say. I was executing the system, but I couldn't have had worse luck. All right? I must have taken 4 or 5 losses in a row. And I was about ready to give up and say, you know what, I'm done for the day. The market just isn't with me. Doesn't make any sense. But what I did was over the lunch break, I was sat there looking at my statistics I built up from the trading system that I was trading. And I saw that actually once or twice in the past this had happened. This had happened before. So, and in the afternoon, the system was able to go on and make some winners. And as it happened, I was able to trade my way out of that drawdown from the morning. But I would never have done that if I didn't have statistics on the system, if I didn't know how the systems would work, if I didn't know what to expect from the system. Okay, so Sylvester, when it goes to how do you get rid of your fear, the only real way that you can do that is experience winning. But before you do that, you need to have statistics on your system. So everybody needs to embark upon backtesting. I know a lot of people don't like backtesting. They say, well, it doesn't make any sense because it's not real market. Yeah, you don't have the money on the line, so your psychology is different and all of this, and that's absolutely correct. But what the backtesting does, exactly, it gives you confidence. What kind of statistics? You need statistics like, when do I take this trade? I took it on X date. What news was around at that particular time? Was there any news 15 minutes before, 15 minutes after? What time did you take the trade? What time did you get out of the trade? So you know that an average trade can last 40 minutes. So why are you getting scared when you're 15 minutes into the trade and it hasn't made you money when the average is 40 minutes? You need to know this kind of stuff. You need to know how much profit you would make on a particular trade. You need to know where the ideal exit points are. All of this kind of stuff. It's not easy, and it's not something that anybody else can do for you. You have to do it for yourself because that's the only way you can build confidence in a system. So you can know that statistically, this system makes money in the long run. That's the only way you can do it. No one can do this for you. Okay? Does that make sense? We'll come to that again in a little bit. So an edge. What's an edge, guys? An edge is literally just, a slight statistical possibility that you're going to come out on top. All right? It's not a silver bullet. An edge just means that you have something over the marketplace, not the entire marketplace, but you have something in your trading that will allow you to come out ahead of the game, given a large enough sample size worth of trades. Anything over 50%, yep. You know what? I've got a friend that trades and his strike rate is about 27%. 27% is just absolutely nothing, right? But guess what? He's profitable and he can trade that system. I personally can't trade that system. For me, I need to be told that I'm right more often than not, but he's a person with a 27% strike rate. He's got such a positive risk reward that he comes out on top of the game. He makes money with that. So really the percentage strike rate doesn't mean that a system works or doesn't work. You've got to take everything into account there. All right. So your edge is not a silver bullet. The markets can only go sideways, up or down. All right. You need to think in terms of probability. You need to find a way to eliminate one or two of those market conditions. So for example, I'm a trend trader. I believe in trading in the direction of the trend, in the direction of the momentum of the market. So I know that if we're in a sideways market, I'm not allowed to trade. I know if we're in an upwards trending market, I can only take buying opportunities. I don't have the option to take a selling opportunity. And I know over the long run that will bring me out ahead of the game. But it doesn't mean that I'm going to be right every single time. It's just an edge. It's just something that I've got statistics on in the past, over the past couple of years, and I know that if I do it enough, I should come out ahead of the game. 1 second, Sharina. Hi, Alex. I have this issue on psychology. I've heard you should only trade with money that you're prepared to lose. How many people who want to trade for a living can have a large enough sum of risk capital? To be honest with you, probably very few. And that's why you need to treat this as a business and look at this as a long-term endeavor. You need to look at the long game here. So, I would be wrong to say that you can take £1,000 or $1,000 and give up your job and retire tomorrow. You can't do that. All right. But what you can do is you can use the power of compounding and you can build up that bank so that over a long enough period of time, let's say in 3 years, for example, you can build up a big enough bank through your trading and through other savings to be able to then, work on this as a full-time job. But it won't happen tomorrow. And I'm sorry if that disappoints many of you listening to that, but it's just a fact of life. It's the truth. Yes, some people will get lucky. Yes, some people will be able to do 100% a month, but there'll be 1 month when they lose 100%. And then what that ultimately means is that all of those previous months where they made 100% counts for absolutely nothing. All right. Trading is a business. You're not at the races. You're not here to entertain yourself. You need to treat it as such. And, as I said, unfortunately, not everybody's going to be able to give up their job tomorrow. But if you're willing to put in the effort and you're willing to use the power of compounding and be disciplined, then it is something that is very achievable. Okay? That people come to trading, they read one book and they think, you know what, I can make money. And worse still, they believe that they can make money whenever they want. Okay? Who here would open a shop, let's say a clothes shop or something that's open between midnight and 4 a.m. in the morning? Who here would do that? Very few. Okay, and there's a reason for that. You wouldn't get the business at that time of the night or early morning. So why do people come to trading and think, you know what, I've read this book, I know exactly what to do, and better still, or worse still, I'm going to trade at between 9 and 10 p.m. at night. I'm going to do short-term trading between 9 and 10 p.m. You know, exactly when the markets are closing in the US, you're deciding to trade, or you're going to trade between 10 and 12. It doesn't make any sense. Okay, you need to know this business. You need to have a plan. You need to have a schedule. If your schedule says that you can only dedicate an hour an evening to your trading, then guess what? Unfortunately, you can't day trade. You can't do any short-term intraday trading. You need to take a step back and you need to trade longer-term charts, because that's the reality of it. That's the reality of your trading. You can't force something to happen, right? You really need to treat this as a business. You don't just jump in here and there and think, you know, I fancy trading today. I'm going to try and take a couple of trades, because in the long run, you are definitely going to come unstuck. So treating trading as a business, what else does this mean? It also means keeping records. It means, you know, keeping your administration in place. Now, everybody hates paperwork, but we have to do it, even as traders. That means keeping a diary of your trading. You need to know that yesterday you took X, Y, and Z trades and you did really well because you followed your rules. You also need to know that you keep making the same mistakes. Because the problem that we have when we don't keep a diary, we don't keep a trading journal, is that we tend to forget those stupid trades that we make. We tend to say, you know what, I'll never make that again, so I don't need to think about that. That was just, you know, a once in a blue moon type activity. But I'm sure if you documented that, and, you know, over a month or 2 months or something, you'd see that you're making the same mistake a little bit more often than you're willing to accept and you're willing to admit to yourself. So you need to keep a trading diary, and it's more than just pointing out your mistakes. It's also about pointing out what you're doing right. If you want to make money trading, it seems like a really, really simple formula, but, you know, too few people follow this. You need to ultimately do more of what's making you money and less of what's not making you money. Seems really, really simple, but I bet no one here really keeps a note of what they're doing well and what they're doing badly, and what loses them money and what makes them money. You know, maybe you're better at trading certain setups than others. And you know what? Eliminate those setups that you aren't trading well and just focus on increasing your size for the setups that you do trade well. Alright? So you need to keep a trading diary, you need to keep a trading plan, and a business plan. Right? Now, what do I mean by this? Two types of trading plans here. I know I'm running out of time here, so I'll try to be quick. Two types of trading plans. We have the individual trading plan and the trading business plan. Every trade you take, you should have a plan in place. You know, if you're day trading and you're taking 6, 7, 8, 9, 10 trades a day, then perhaps you can't do it for every single trade, but you can certainly do it for, you know, for that particular day. You can say, I'm looking to do this. These are my entry prices. This is what I'm going to look to do, and you adhere to your trading plan. Right? I've got a really, really corny line there, which is fail to plan, which equals planning to fail. And as I said, it's really corny, but it's oh so true. So we've got our individual trading plan and our trading business plan. Now they're two separate things. The trading business plan is your overall plan. It's your, you know, it's the global plan. Here you put all of the rules for your system. You put your goals in there. You know, you need to measure yourself. You can't just come to trading and say, I want to be profitable. That's not really enough. Okay, maybe that's your initial goal, but you know, or let's say I want to be successful. You need to define success. What is success? Is it paying for some of your bills? Is it just being profitable? What is success? Define it. Let's have some goals here. You know, let's have your short-term goals. What do I want to achieve in 3 months' time? What do I want to achieve in 6 months? What do I want to achieve in a year's time? What do I want to achieve in 3 years, in 5 years, in 10 years? Okay, you need to be able to measure your progress. Everybody wants to make progress, but how do you know you're making progress if you haven't put clearly definable goals in the beginning? All right, so you need to define achievable goals from the outset and be realistic. Your goal can't be, I want to make 100% next month, because that is the quickest way to wiping yourself out. That's not a real achievable goal. An achievable goal may be, I want to be profitable to the tune of an average of somewhere between 3 to 5% over a 3-month period, from 6 months time. That's a goal you can put in there. All right, and then you can measure that. Your trading plan provides you with a central place, as I said, to define your system, your rules, and your money management. So more than just your trading system, more than just your goals, you need to define your money management. What sort of position sizes am I going to take? What's my threshold? When I get to a certain point, when do I start to up my position size? How much do I up it by? You need to define all of this in your trading plan. And you know what? This trading plan is a living, breathing document. It can be altered with experience. When you start to see that you're better at trading some setups than others, you eliminate those setups you're bad at trading from your trading plan, and you focus on the ones that you're good at. Does that make sense to you all? Okay, let's go into what I was saying there. Now, the individual plan. What is the individual plan? The individual trading plan is about each unique trade that you take, okay? So our global business plan was very much about, this is what my trading is in general. Your individual trading plans need to be about, okay, I'm looking to take the euro dollar today. If it breaks above, 130, 131.00, I'm going to take a buy. I'm going to place my stop below, 130. So I'm going long. These are the technical reasons that I'm doing it. These are the fundamental reasons. The news has come out, for example, non-farm payrolls have been disappointing. Whatever the case may be, they're the reasons for getting in. Your stop loss, your take profit, your roadblocks, and any other speed bumps that may be in the way. Your individual trading plan basically needs to leave nothing to the imagination. You're most rational when you're not in a trade, when you don't have money on the table. So that's when you need to make your plan, and then you need to do your very, very best to stick to that plan once you're in the trade. Does that make sense to you all? Trading records. Now this is something that I quite like, okay? Trading records, you need to keep 2 sets of trading records, and a few people are surprised when I talk about this. The first, you need to keep your actual trading records of what you do, So I took this trade at this price, it made me this money, I lost this money, all of that kind of a thing, alright? You maybe take a screenshot of the chart and annotate your chart as to why you took the trade. Then you have your optimized trading record. Now what's that? What are my optimized trading records? Your optimized trading records are the trading records for the trades that you would have taken, or you should have taken, or you should have executed according to plan, but you didn't. So then over time, you can start to see a pattern. So let's say, for example, your actual trading records are poorer than your optimized trading record. What you can now say is that, okay, so it's actually me. I'm the reason that I'm not as profitable as I could have been. I mean, it may go the other way. You may find that you just have a feel for the market and optimized trading records, are worse. But that's going to be, very, very few and far between those occasions, all right? So your optimized trading records tell you what the trades would have been had you stuck to the rules. Because I guarantee you, even if you are very, very good at executing your trades, there will be certain instances when you don't stick to the rules. There'll be certain instances when you don't, maybe you jump out early, or you move your stop to break even to lock in some profit. And it's just an interesting measuring stick to be able to see, if I had stuck to the rules, this is where I would be. I haven't stuck to the rules, so this is where I currently am. And then it helps you to improve your trading. All right? Okay. So summary documentation is a necessary evil of trading. You can't get around it. The traders that fail to keep records, are the traders that fail, those that fail to keep records. Okay? Trading is a business, and you need to keep your business plan in place. You need to keep your individual trading records there. You need to do all of it. And finally, how do we build confidence? I touched on this a little bit earlier. We build confidence by building statistics. It's a very, very, very boring job, but it's very, very necessary if you want to be successful. If you want to make money at this and you want to, look at this as something that you can rely on, that you can depend upon, you need to know what to expect from your system so that you know that if you're trading into a drawdown, that this is expected. You have to build confidence in your system, guys. Yes, discipline and focus. And I know that you can paper trade, and paper trade is fine, but before you get to paper trading, build up statistics on your systems. Go back, and I'm not talking about going back over the last week or the last month. I'm talking about go back over the last 3 years, 4 years. Don't just eyeball the charts. Go forward one bar at a time and say, what would I have done here? Another bar forward. What would I have done here? Another bar forward. What would I have done here? Build up all of those statistics so that you know in the heat of battle, when you're at the hard right edge of the chart and everything looks ugly, that you can depend upon yourself to execute the trade as you intend. Exactly, Boyke. He said, there's no one after you, so don't rush. Alright, this is a marathon, not a sprint. No one's going to get a first place prize or some kind of a bonus to be the first to get in there and start trading. It's a lot more sensible and a lot more intelligent to take the time. If it takes you 3 months to build up all of these statistics, c'est la vie. Do it. Okay? What do I think of the Forex Tester program? Yeah, it's a very good program. You should look into purchasing it if you can. Okay, guys. I'm going to get off my soapbox, and if we've got some time, I'll let a few of you ask a couple of questions. Sorry, I know that I've just kind of spoken at you for the last 45 minutes. There were perhaps a few too many slides here, but perhaps we can approach this subject again in the future if the guys at FX Street are happy with that. But if we've got some time, anybody any questions, please fire them away. Is there a way we can get this slide? I believe our friends at FX Street are doing a recording of this, so I'm sure we can send out a recording link later on. Thank you. It was beautiful. Yes. Okay. So there's confirmation there from Mod. We're recording this, so you guys will be able to see this afterwards. Any other questions? Does that make sense to everybody? Okay. I know it's not the most exciting thing. It's not telling you that you're going to make 1,000% tomorrow, but it's reality. All right. So it's something that we have to do. If you want to be successful, then please, guys, give yourselves every single chance that you have to be successful at this. Okay. Don't sell yourself short. Exactly. They can do both, Manoy. You could trade your own account, or you can attract capital from other people. You could go to a prop firm. There are many, many different options here. If you've got relatively small trading capital available to you, but this is something you really want to do, then why not focus on being consistently profitable over, say 6 months or something, and take that to a prop firm and see if they'd be willing to give you a chance, and then they'd give you their money to trade. It's not an easy thing to do, but it's definitely a possibility that's there. But you can't go to them and just say, teach me. You need to prove to them that you have the hunger, because everybody wants to do this. Yes, Infernal, there will be a recording to this. Good, Sylvester. That's exactly what you need to do. Thank you very much for doing that. Do I know how many daily traders are successful? I personally don't know them, but the statistic is about 95% of people fail. It's not necessarily because 95% of people have to fail. It's they're doing the wrong thing, and they give up, or they get wiped out. That's why I'm saying do the work early on to prevent yourself from getting wiped out. Trading is about living to trade another day. Okay? How does one get a list of prop firms? If you do a search on the internet, you can probably get a pretty extensive list, for your area, wherever you are in the world. But I don't know if there's one single list for all the prop firms out there. Yeah, exactly. The failure, yeah, it's not just trading. You know, the failure statistic, you can actually apply that to the majority of businesses out there. And you know what they'll say if you go to sort of like a business mentor or something like that? The majority of businesses that fail, ironically or surprisingly, they don't have they don't have a business plan in place. They don't have, a well-defined plan there. So, unfortunately, Anil, that is the statistic. So, but you guys have the opportunity now to change that statistic. So statistically, yes, 2 to 3 of you will be successful that are here in this webinar. However, if you listen to what I'm telling you and you put in the work, then there's no reason why that can't jump, from, 10, 20 or everybody in here. But you have to put in the work. Okay? So we have a few more questions. Anybody else, any other questions, guys? Thank you very much, Manoj. The recording will be posted on FX Street. If you go to FX, there you go. The link, Mod posted the link there for the archives. Yeah, the key really is focus on your journal entries. It's also have a clearly defined plan. Don't leave too much up to discretion. Because when you leave everything up to discretion, it really depends on how you wake up, how you feel when you wake up in the morning. Alright? So try to have a clearly defined plan there. Once you've got the plan there, do the necessary work. Keep your journal, take screenshots, keep your optimized results so you know what would have happened had you stuck to the rules and over a long enough period of time. Just slowly but surely eliminate the mistakes from your trading. Do less of what you can't do well and do more of what you do very well. A daily trading plan. Yeah, I mean, the daily trading plan will kind of go towards your individual plan, but you also need to have a general plan. Okay? I'm not saying you can't be successful if you don't have any of this. I'm sure there are people out there that can be successful. But for the majority of us, we need this in place. Yeah, trading is definitely one of the best. Trading is the best business in the world to me. Sat here in front of my charts, it can be frustrating at times, but you can have fantastic mornings or afternoons, and trading is definitely the best business in the world for me anyway. If your schedules are such that you can't trade in the mornings, are you talking about UK mornings or US mornings, Charlotte? We're talking about GMT or Eastern Standard Time. Ultimately, if you can't UK mornings and day, okay, you work full time. So then the best option for you is probably to pull out and start trading something like a longer term chart, so either a 50 range chart, or if you trade time-based charts, either trade a 4-hour chart or a daily chart or something like that. Something that allows you not to have to be in front of your screen when you execute. How many trades are advisable per day for my scenario at the moment? Sylvester, that really comes down to your system. My system, for example, I can expect to take anywhere between 5 and 10 trades in any particular day. But that's just my trading system. There are others where you may only take 1 or 2 trades a day. But what you need to be aware of is if you're trading an intraday system like mine, for example, I wouldn't be taking 1% a trade or 2% a trade, nowhere near that. Okay, so if you're doing if you're day trading, you more need to have sort of like a daily stop loss as opposed to an individual stop loss for each trade. Right, so obviously what you can say is that I'm willing to lose 1% in one day. And if you can take on average of 5 trades a day, you chop that up and say, okay, I can only take, less than 0.25% per trade. Does that make sense, Sylvester? How long does it take to devise a trading plan? Well, first of all, you need to put in the effort to, come up with some sort of a theory on what you believe can work. And I'll give you guys a hint. Trading with the trend and trading swings within a trend is a very, very good strategy. All right. So buying the dips in an uptrend, selling the rallies in a downtrend. Once you come up with this theory and you go about backtesting, it'll probably take you a good few months to come up with a good trading plan that's been tested that that you can rely on. Is there an internet source for good? I don't know of one, I'm afraid. Utilizing a daily trading plan as a basis for generating trades, because I find I focus more on the market environment and adapt my strategy to the price activity as opposed to the general strategy. Okay, that's fine. I mean, if that works for you, George, then that's not a problem. But, you still have a way of analyzing the price activity, right, on a daily basis. Now that will be part of your general trading strategy. Your general trading strategy will be to do X, Y, and Z on a daily basis to look at the market conditions. Does that make sense? Where is the best place to get economic data and concise information on the market? Best place to get economic data, are you talking about the times that stuff come out? I'm sure FX Street have a calendar there. There's also a whole heap of information, market commentary and stuff on FX Street. We do some of that. There are other also very good traders and analysts out there who put all of their work on FX Street. So, if you're looking for fundamental analysis, there's a fundamental section there. If you're looking for technical analysis, there's also a technical section there. There's pretty much something for everybody. So this will be a good place to start, and then you can branch out from there. What is the best first thing that I look for in a chart in order to establish if I want to trade for that day? I want to see that the chart is trending, that it's moving in a particular direction. Okay, if it's just going sideways, then I'm not going to be as happy about trading. I may trade, but I'll be trading more conservatively with smaller position sizes. Do I avoid trading Friday? No, not at all. I'm quite happy to trade Fridays. What I won't do is I won't take a position that I need to carry over the weekend late on a Friday afternoon. I won't do that. But I'm quite happy to take trades on a Friday. It's not a problem. The answer for someone that works all day is to trade a longer term chart. So if you're trading range charts, look at something like a 50 range chart. If you're trading time-based charts, then trade something like a 4-hour or a daily chart. Yes, Sylvester. My Twitter is Alex Ong UK. You can follow me there. It's not all about trading. You'll see me complaining about my beloved Arsenal team there, but I post some updates and some trades there as well. So Alex Ong UK. Okay. In what order would I put these in importance? All right. So we've got psychology, strategy, money management. I would almost say, to be honest with you, that psychology and money management sort of go hand in hand. And then obviously you need a good strategy, but if you don't have the right psychology, then you're struggling. There's no point. So I would say psychology and money management, I would just put above the strategy, because you can have, an average strategy and make money if you've got good psychology. But if you've got bad psychology, it doesn't matter what strategy you have, you're going to be struggling. Do I play for Arsenal? I wish. No, I'm not Alex Ong, Alex Ong, O-N-G, without the S. And yes, I do trade Mondays. And yes, I do hold trades over the weekend, but only if I've got, I won't enter a trade going into the weekend. But if I'm already in a trade, then yes. There you go, guys. I hope you can all see that. So are we all okay here, guys? Do you have any other questions at all? It was the best so far. Wow, thank you very much. Excellent. Okay then, Vicky. Well, thank you very much, everybody, for attending. It's been a pleasure as always, and I hope to see you all on the next on the next webinar. Sylvester, we do a webinar sort of every 2 weeks, so I will see you soon, no doubt. Take care, everybody. I'm going to sign off now. So thank you very much, everybody at FX Street, for having me. Thank you, everybody, for listening, and I will catch you all in a couple of weeks. Have fun now.